Well, we could talk about it now, I guess, if you want to jump into that part is like, the 80 million situation allegedly. So what they said is that, obviously when Trump, he made the Truth Social post on Friday, and that made the stock market fall very, very sharply, but it also made the crypto market have a major pullback. It was actually the largest liquidation in crypto history for a single day.
Mm-hmm.
And allegedly, there was a $20 million hedge that was put in around an hour before he he made that tweet, and that $20 million bet turned into $80 million very quickly. Now, what's even more suspicious is that the account was opened just for that. It wasn't an existing account. It was opened just for that.
Mm-hmm.
And then I think it was closed shortly after that. Closed it out after shortly after that. So 20 turned to 80 once
That's a hell of a flip.
the markets fell and the Bitcoin fell. But then also a lot, unfortunately, there was at least one situation where somebody had committed suicide.
Yeah.
Now, most people will say like, well, why would somebody commit suicide? You just wait, like, you know what I mean, like just wait it out. But and it's something that we haven't really talked about a lot. But when you trade on margin or you use a high level of leverage in your
Leverage.
trading, what happens is that you can get cashed out. And apparently, I guess this was a big time crypto trader, and apparently he was heavily leveraged on one of his trades, and they said he lost $40 million. And I guess that led him to commit suicide.
Mm-hmm.
So this is the dark side. And shout out to Alex Good Energy. He had mentioned that maybe we should talk about this on Blackout, but I think it's appropriate even on Market Mondays because it is an investment conversation, and it does highlight the dark side of trading for sure, where you can lose a lot of money if you don't know what you're doing, or if something goes, in your opposite favor. So the mental health aspect of it is extremely important because this goes back to the 1920s, the Great Depression, when people was jumping out of windows. This is not
Mm-hmm.
new. You had stockbrokers that jumped out of windows in the 1920s. So when we're talking about investing and we're talking about trading, we also have to put mental guardrails up, and then also just safety precautions in your investment strategy and your trading strategy, because when things don't go your way, you could potentially,
Mm-hmm.
fall into a deep depression. You could go into a dark space. You could lose a lot of money. You could lash out at people.
Mm-hmm.
Worst case scenario, like what happened last week, you could end up hurting yourself. So yeah, the dark side of trading. You want to talk about that?
Yeah, for sure. In futures, you can have 5-to-1, 10-to-1 leverage. Just number one is the reason why I say you should only take 1 to 12 trades per year to mitigate risk. But there's a couple of things you have to look at on crypto and any leverage asset. If you're going overseas to have 100-to-1 leverage, it can go against you. Secondly, the part that isn't talked about enough is when you're down, or let's say the market is bleeding down how it was Friday, even if you have a stop loss in place, you can continue to bleed past your stop loss. I have 4 or 5 people message me like, hey, I'm trying to go long in this position. I can't. And then a few others said, well, I'm past my stop loss. What do I do? And I'm like, you have to call your broker, because at that point, there's nothing you can do. That's why we say trading has considerable risk. And the upside of it is that you can make a ton of money. I'm talking $2 to $10 to $15 million in a good day.
Well, we saw that with it's the tale of two stories, right?
Yep.
The one guy leveraged and off the leverage made $60 million in one day.
Mm-hmm.
Somebody else lost $40 million in one day.
And lost his life. And the other part is when you're trading, you're not just competing against the best traders in the world, you're competing against the best hedge funds, and now people who may have intellectual sources that you do not have, and governmental relationships that you may not have, and the broker doesn't care either way. We were talking before we started, Martin Shkreli, who got caught up in that pharmacy scandal a few years ago, who bought the Wu-Tang rights. He was down $28 million or $22 million the week before, and it's on YouTube, and JP Morgan's calling his line like, hey, you got to figure something out to wire this money in. So be careful if you're trading on leverage. If your profit factor is not 15 or higher, so for every dollar you put into the market, you're able to get 15 out. Don't trade on leverage. And this is a lot of times, even when it comes to newer stocks, or I even had a brother this weekend ask me like, well, why won't you talk about some of the quantum stocks? I'm like, the platform is too big for me to tell you to invest in something that they have even said privately is not going to be the leader in quantum. The upside is always the immense amount of money that you can make. But when you are in the whole 40 million, that kid didn't have somebody he can call and say, let me get a bridge loan for 25 million so I can work my way out of the hole. He can't just run to another country and escape the problem. And even when you're down that much, some brokers won't even let you open up another account to trade your way out of it. Mm-hmm. Trading has considerable risk. Please be careful. Please protect your mental health, and don't over leverage in trading. God rest his soul.
Yeah, it's unfortunate. It's tragic. But I'm glad we're speaking about it, because all the things that Shadi mentioned are true. Right? If you're new to this, it can become daunting. It can become depressing, and it can feel overwhelming. Margin is something that we don't talk about, because I don't think any of us actually use margin. It's not something that
I do in futures, but that's why I say you got to limit the number of trades you take per year.
So people even just need to know how it actually works, right? And so margin is borrowed money. It's borrowed money from the brokerage, and you are allowed to use that up to a certain extent or a certain point. And when it's stocks are appreciating, futures are appreciating, options are appreciation, it's great, right? You're making the money. Mm-hmm. The problem is when you see a day like Friday happens and it's a drastic pullback, right? Those margin calls happen very quick, and the margin call is saying, "Hey, we want our money.
I want my bread. Give me coin."
And they click in very, very quickly, right? And hit a certain threshold, and we want our money back. The first thing they're going to ask is, "Hey, you need to put more money into your account, or you need to liquidate all of your assets."
Yep.
Now you might have put that margin call on a certain position, but it looks at your entire portfolio to get its money back, right? So if you're on a brokerage and they make a margin call and it's not inside of that call, they're going to look how to liquidate all of your portfolio.
That you've been holding for 5 years. And this is why you need to separate your trading account from your long-term investment account.
That's where I was going. It's the reason why you have separate accounts for separate type of trading, right? So for me, it was 3 accounts. I have my long-term holds, right? Stocks. Have some indexes in another account, and then I have an options account. All 3 different brokerages. I don't mix the money up. The other thing is time. Right? We always talk about using time as an asset, especially when you're trading, which is why we talk 5 to 10 years, or for an eternity if you're holding some of these companies, or you're buying yourself time in terms of leaps and options. We always want to use that because the volatility is going to happen. Volatility, it's actually needed. Right, so we can have better entry points. And